All right, some interesting stuff I wanted to share with you guys today. Not all of it actionable or important, I should say, but interesting. Maybe we should start with the more important stuff, I guess, um, and we'll move from there. Very quickly, let me get it out of the way because I'm going to forget. WallStreetJesus.com. Anybody who's new has any question on anything I discussed today, or interested in free trial or any of the premium packages we have to offer, wallstreetjesus.com, you get a lot of information there. All right. So we have, let's start with just basic S&P 500 and kind of continue from where we left off last week. All right, so this was the issue we were talking about, right? We refer to it as the Pink Panther when things get a little too overheated, right? Usually get hot sentiment, whatever, oscillator, relative strength, overheated, stuff like that. But what you want to see, and you never know the when, but what you want to see this get washed out as opposed to run through and continue higher and continue to melt up like we were seeing any further, because what usually happens, people give up on believing the market will ever pull back, and then you get at least a washout of this pink area, right? This is something we were discussing recently to keep an eye on to see how far it goes, because we don't know, right? We don't know. So here is, like, for example, we were talking about this the last time. You can see this one went a little bit further than some of the others, right? And then you get at least a wash of that. So, my opinion, well, not my opinion, but that's a fact, that today was part of the process of washing this out, okay? It didn't get too crazy here. If we did run through this, it could have been a bigger problem. But I think the more important thing out there, and it's something we've been talking about for quite a bit, even before we started to see some caution and sell signals on the things we were looking at. Underneath the hood, the indices, the rally, just didn't do it justice. Like, you weren't getting a feeling of the true market out there just looking at the indices, right? We were talking about that a lot. There was a lot of stuff out there that's gone into correction mode. Did I hit record, by the way? I'm just thinking about it now. I think I did. A lot of things that went into correction mode, while the market was melting up. And, even the stuff that at least I felt was a big part of the melt up, somehow, some way, they found a way to even correct some of these areas, and the market continued to melt up. Don't ask me how. Well, we know how. They rotated back into tech after a sell-off there, and they had tech pick up the pieces while that whole red-hot reopening theme went into hibernation. All right? And that's the problem. This is the problem, guys. This is what makes things so tricky in individual names. It's like we've been beating a dead horse here, but the reopening theme, that was it, right? That was the place to be. Higher rates, that was the place to hide. And even if you bought on the recent pullback, you were early because these things had further to go. Like, I looked at like TRIP today, right? And granted, it's back to the lower end of this range recently, but if you're buying options, you rather avoid it if you can. Energy sold off a little bit more. The financials now, this is post earnings, a lot of dead area here, right? A lot of dead area while the market was melting up. And the money's been coming out of these things of most recent and going into the big FANG and tech names that really nobody wanted any part of right? A couple months ago. But even there, right now, you're seeing breathers there too. So the one thing we're starting to see that we haven't seen in a while is that C word that we've been talking about, right? Correlation. A lot of things moving up and down with the market. Okay. And for me, like that's what I want to see. I love rotation, especially earlier, or I would say midway through rallies, because it allows you to find spots when the market needs to consolidate. But when you get this rotation so long in the tooth, it's been going on for so long, right? Out of growth into the reopening names, there's just nothing left. Everything, they found everything on the reopening and commodity side, almost everything, right? I mean, we were up to like 100 sweepers deep on an FCX and a trip and all that stuff. That egg was hatched. It was gone. So we needed to see this, what we're seeing right now, okay, where names are highly correlated to the indices, because eventually, when this is over, I think it loosens up things in the individual names again, where we can find some spots, at least for trades, okay? And it can't get any worse than what we went through as far as difficulty finding a name that would go up if the market went up. That was part of the problem. The market, you could be uber bullish, okay, and the market went up 0.5% the next day, and your stock did nothing and went down. That would drive you nuts, and probably it drove all of us nuts. And that's the type of environment, right? And it's all part of this game and the discipline of this game. That's the part of the environment where you have to, put the gun back in the holster. You can play. There's no reason not to play, right? You don't have to be robotic about it, but you just don't want to get, you just don't want to be jumping out of your shoes, sticking out your neck in that type of climate, right? The reward is not worth the risk, because then what happens, this happens, all right? And if you're not benefiting off the up days, right? If you weren't benefiting off the melt up in individual names being long, and then all of a sudden everything becomes correlated to the market to the downside, you could see how the risk reward is just awful. Okay. And another thing you guys are going to realize is that a lot of times when positioning is fuller, right? When a lot of people are long, and sentiment is on the hotter side, that's where you start to see things like that. Okay. And that's where a lot of like newer traders or stubborn traders who, want exact buy and sell signals, they want bullish sentiment signal, get long, make money, bearish sentiment signal, short, make money. They don't realize, what's really going on out there. And that's what a bearish signal at a sentiment tells us. Okay. Things are a lot more difficult here. All right. The risk reward is poor from here. The easy money is done. Okay. It doesn't necessarily mean you could short off that signal and just instantly make money, right? That remains extremely difficult. But we know the long side gets a lot tougher when these sentiment signals start to light up yellow and red, showing some caution. All right, so that's generally what we use sentiment for, okay? So we at least started the wash. So now, a couple things. If we didn't have earnings season, I would feel a lot better about at least one decent setup coming out of this that we can get our hands on, okay? But being that we're just getting into the heart of earnings season, it doesn't have to work out this way, but it can be really, really tricky. It can be really, really tricky. Okay, ideal situation here, what we would want, we want at the least, okay, we want this, first things first, right? We want this to set up some tactical bullish sentiment signals and line up with a gamma signal. You know what I mean? That's at the least, because what that allows us to do, that allows us to pick a spot and make a bet for a snapback rally on the sentiment side. Okay. And, the first place to look are the indices. And that's where we want to look because names have been extremely difficult. Okay. So that's the first thing we want to try to catch here. All right. And the gamma part of it, okay, the reason why I threw that in with it, the gamma part, I think, will give us that extra conviction that the squeeze should be a pretty decent one, okay? Something that we can hang on to for a bit, a meaningful rally. Not something we can't leave the desk and we have to get out any side of green because things may reverse and fall apart, right? So that's why we want that extra added little gamma signal on top of some tactical bullish sentiment signals. All right. So we're getting close, obviously. We'll see how some of the sentiment lines up after we get off the webinar here, and we'll see how it looks. I can tell you this, going into tomorrow, if there is further weakness, it probably will set up, we'll probably be pretty close. We'll probably be pretty close. At least on the sentiment side, we'll be really close. Okay? So that's the first thing that I have my eyeballs on right now. Okay? The other thing, right, that the better setup that we all have been screaming for a while now is to get a decent wash here. Probably has more to do with time than price action. Okay. And what that will allow us to do, would allow every sector to get washed out rather evenly. And then the sweeper activity that comes in off of that pull in individual names will probably tip us off to what groups, what names are going to take a leadership role from that point. You know what I mean? Because we really have no idea. You could say you do. We have no idea. Are they going to go back into these cyclical names? That's what everybody thinks. Everybody still thinks value cyclical is the way to go. You got Kalanovich pounding the table on cyclical value reopening. I don't know if you guys read the JP Morgan Kalanovich note today, but I mean, he was all bulled up. He was all bulled up. So basically, if you haven't, Kalanovich is pounding the table. Kalanovich is the quant guru from JP Morgan, top analyst out there probably on the street. And he's pounding the table that you buy this dip on anything economically sensitive, from energy to commodities to industrials to cyclicals, everything that basically was, we just saw take off when they came out of growth. So he's not talking about a move back into growth. He's talking about a continuation. Like this is just a pause, and there will be a continuation in that theme. Okay. Now I will tell you this, right? If you're looking to be contrarian, I don't know anybody besides, and I don't even know her opinion, Kathy Wood right now, but I don't know anybody who doesn't think that's the case. I don't know anybody. Not one person. Everybody thinks. Everybody says buy cyclicals, buy value. We got a long way to go. Don't even look at the growth names. So, we all agree it's Kalanovich and, some reputable guys pounding the table on this theme, but everybody's, eyeballs are on it. All right, so it's almost like the pain trade would be the growth trade from here. Okay, well, when we come out of whatever this is. So, you know, we got a lot of things to keep our eyes on going forward here through a frustrating earnings season. You know, if it wasn't earnings season, it would be a lot easier, you know, because the flow would easily guide us, easily. But now being, again, the heart of earnings season, even worse, it didn't even start yet. We're going to see call and put buying all over the place in everything, like we did the last 2 days. So we're really not going to have the flow. We're not going to have much edge out of the flow for at least this week and next week. All right. So here's the way I'm playing it, right? I told you what I have my eyes on solely right now is that squeeze play. Okay. And that's what I'm looking to capitalize on. And that's all I'm concerned about right now, because the better setup has work to do. Okay. If the squeeze, you know, I really don't know. I'm not even going to guess. I was going to make a comment if the squeeze, you know, is sooner than later and starts a new leg higher. I was ready to say it's got to be growth, but it doesn't even have to be. You know, it doesn't even have to be. But I don't see things getting back to normal in individual names until we get a nice washout across the board sector-wise. I don't see it. I could be wrong, but I don't see it. So that's why the first thing I'm looking at here is to catch a squeeze. And, you know, I'll take it from there. I'll take it from there. What else did I want to mention on that? Oh, there are a couple things we can look at as far as positioning. Interesting things out there. Let's see. And then we could talk about names at the end. Let me pull this up here. Hold on. All right, let's look at some positioning stuff, and then we'll look at this, which was the talk of the street today. Bank of America client fund flow. All right, so let's start with here. Here are the Goldman sentiment indicators we look at. And you know, same thing. They keep pushing here each and every rally. You know, they get closer and closer. All right, it's been singing the same song for a while. I just can't see, like, for what we want, right? What we want, a potential fresh new leg of this rally where new leadership, new names will emerge. I don't see it until all this stuff gets washed at least to neutral. You know what I mean? At least to neutral. I don't see it. And then we're just going to continue, you know, we're going to continue to play the same names off dips, and that's okay. But you don't have that, you know what I mean? It's not initial activity. These are repeat names off dips. So here's the other thing, risk appetite, right? You can see it's starting to curl now. Remember, we spoke about it could stay up here all it wants. Once it starts to curl, it could become a problem because of everybody, all this speculation out there. There's the curl. This is before today, actually, too. And yeah, this tells us a lot too. This is at a Deutsche Bank. You know, positioning pretty full here. And you know, what it tells us is just there's supply out there. You know, there's supply out there. If they find a reason to sell stock, there are sellers out there, which last year we never had to concern ourselves with. All right, so here are hedge funds. They already started selling. That's what's interesting here. They already started selling, and honestly, I think we're starting to see that in the price action. If they sell, we're going to see it in the price action. You know, again, hedge funds, when they're at extremes, especially when they're at bullish extreme, right? That's the music to our ears. Okay. But a lot of people think it's just always automatically contrarian to be, you got to be anti-hedge fund. That's not true. Okay. What happens is if they start selling, you can't use that as a contrarian signal and just buy it, because what happens is if they sell and they got enough to sell, they can move markets. You know what I mean? They can move markets. That's the problem. They're moving big money, hedge funds. They're not pikers. Yeah, and the margin calls too. You get exactly. You get run over. You know? So what's bullish, it's not bullish that they're selling right now. That's not bullish. What would be bullish is when they're done selling. That would be bullish. And you'll probably see it in the price action, you know. You get a nice, at least I would think, 10% pullback for them to get out of a lot of what they own. And that would be a really nice setup. Actually, you had it here, right? Oh, I chopped it off. Here, it started over, it was up here, and then it came down to here. That was the election. You had that nice, it was like a correction, right? But it was nice time-wise. It took some time. That's what was the best part about it. It wasn't that deep. And then look, once they were gone, you know, then they could only become buyers. That's the difference. And you're going to see it when they start buying like this, you know. So we got work to do there. We got work to do. Let's see. Should we? Oh, so here's hedge funds. So this is out of the Bova note today. You got hedge funds. They've been net selling, I think, for the past couple weeks. No, net selling. Yeah, for the past couple weeks. Institutional clients have just been selling. They haven't bought in ages. And supposedly, according to Bova, the only buyers were retail last week. Here are hedge funds. Staples saw the biggest inflow, so defensive name. Consumer discretionary, biggest outflow. These are what hedge funds did last week. Concentrated in large caps. Institutions, healthcare saw the biggest inflow. So institutions bought some healthcare, but net they were sellers. Where's that? Oh, here, the light blue. That's the only thing they bought. That's the only thing they bought. You could see, here's the total up here. See that on the top line? They sold the shit out of whatever they were selling. Consumer discretionary, so the biggest inflow from private clients. Consumer discretionary, industrial, biggest outflow from private clients. Yeah. So here's the So this is what Hartnett's talking about. This is today. Today. Oh, when did this take place? The past week. Every week they come out with it. You know what I mean? This is just Bova, Bank of America, Merrill Lynch clients and their positioning. All right, so here, pause in increasingly bullish sentiment. Biggest outflows in 5 months. Clients were net sellers of U.S. equities, $5 billion. Last week, here, market weakness could continue near term. In the prior times, weekly flows, when they were this negative, the subsequent week returns were minus 1% on an average. That's nothing, though. 75% of the time. So usually leads to some weakness. And that actually happened today. So Yeah, I love Bova's got the best stuff. I mean Goldman too, but Bova, I love Bova, especially with individual names and stuff. Look, retail clients were the only buyers last week. Institutions and hedge funds, they sold. Retail clients have been buyers 8 straight weeks. Buybacks muted. Our clients sold cyclical stocks and bought defensives. So they got defensive. All right, interesting. There's nothing really, there's no big takeaway as far as sectors are concerned. The only thing is there's been a lot of bullish positioning in the reopening theme for a while. So that kind of like built up, especially amongst hedge funds. But recently, if you remember, they had to move money into the big tech names because they were so underowned. But now they've moved so much because a lot of money came in, so there's not much really, there's no edge, in my opinion, in the positioning out there yet. They chased what they needed to chase. Here's the gamma scenario situation coming into today. All right. So what I mentioned earlier, something like this. I wouldn't mind this one bit. This would be as good as it gets for what we're looking at initially. Seriously. So that would mean, if you guys don't remember how this played out, it really played out nicely. Even if you just wanted to trade it intraday, you didn't even have to take much risk, overnight risk. But we had a bullish sentiment SIGs into this, right? With gamma and a really nice move, okay? But look, gamma didn't go really too far. And what happened was you got another dip. And if you remember, we didn't quite get to bullish signal, but we were right there, literally right on the line. And we got a gamma signal here too. And then that leads to a bigger squeeze. You get the double whammy. Ping pong, 1-2 punch. So I wouldn't mind that. But, initially we're looking for this. And then that's your sell window for the trade. How does... it doesn't. The gamma or the squeezometer doesn't get affected overnight session. The squeezometer is an intraday indicator. What we've learned is when you start getting into the 30s, usually lines up a decent signal, but it's more for a measure of intraday positioning. Kind of like the other one, the anti-VIX, which measures VIX positioning intraday. So yeah, that's, and that's what we got to look for here, because if it's quick, I'm talking personally anyway, I will not be playing for or expecting this again. You know what I mean? I won't be doing that. So I'm just going to be looking to catch the squeeze, and then take it from there. If we got something that builds a bit, then, I'll look for a little bit more. The longer it builds, the more I would look for. But yeah, no names. Unless I can't even. Like I was going to say, if they bomb something, they bombed a Micron today. That stuff I wouldn't even, rack my brain. I just hit the buy button. But we're right in the heart of earnings season. I'd be sick to my stomach if I played a Micron instead of the index for a squeeze and WDC warns, I'll fucking kill somebody. You know what I mean? I'd kill somebody, right? And that could easily happen. It has nothing to do with Micron. WDC or STX warns, because they're reporting soon, and Micron's down while the market squeezes. That's the risk. I mean, listen, the probability of that happening, even during earnings season, it's higher, but it's not, not likely. It can happen. But, if you want to eliminate that risk, try not to get too cute and, just play the S&P 500. It's even hard to play any other index, to be honest. If you play I like to play like TNA, usually when things are really correlated, and you could really get screwed now, right? That could underperform without a doubt. So, or the NASDAQ could lag if the reopening theme is in play, it'll still be up, but so anyway, your best bet just to try to catch the S&P 500. Yeah, you could play the U-Pros, or you could just play SPX calls, SPY calls. You could play ES if you play the futures. Any of those things. It's whatever you're comfortable with. Whatever you're comfortable with. But that's initially what I'm looking for. So that's gamma. And here's the thing. Here's what we've been looking at here, right? So this was the tough part about what we faced coming into this week, along with Pink Panther. Okay, so not only did we have the overall market hot, there wasn't really anything besides energy that was even close to lining up. So you want to start seeing at least the bulk of these things start to line up. Move in sync a bit. So this is what we were talking about. I see a couple of you guys mentioned it, right? Maybe get a bullish signal from semis. That would, it'd be almost too good to be true to line up post earnings. That would be a beautiful thing. It would be a beautiful thing. Let some of these semis report. They've all run a long way. Maybe they sell some of them, take some profit, and then you get one of these bad boys. Post earnings. That would be ideal. Tech. See, we had where the market wasn't too appealing, but we had a scenario where you had semis and tech firing bullish signals because everybody was going into the reopening trade. Remember? So you had a spot where you can make some money in the interim. Micron has earnings? No, WDC reports on the 29th. That's the problem. Yeah, they reported. I think they report late June or July. Yep. But you're close enough because WDC reports, and it's likely going to have an impact. Maybe not as big. And you got, exactly. I was just going to say that. What about, let me ask you a question. What about if LRCX warns or misses badly? They're going to take down Micron too, aren't they? Now, if LRCX knocks the cover off the ball, Micron will benefit. But you understand, it's an earnings play. So that's the pickle we're in. So yeah, this is what we had, which was okay, even though the overall market wasn't the best setup. But now coming into this week, we really didn't have much. Everything, energy is the only spot. And here's the question, right? Is energy going to be the only thing that goes higher? Just because it's You know, they've shaken out some bulls. I think the whole reopening play has to go higher for energy to go higher, my opinion. You know, I think the whole reopening theme has to catch a bid for energy to do well. So, you know, you might want to pay attention to that. Or at least, you know, at least we get a washout, decent enough washout in some of these groups. We got the start of it today. You know, we got the start of it today. Look, consumer discretionary, housing cooked, industrials, you know, financials didn't want to come in for the life of them. Mining is back at neutral here. REITs got hot. Retail, you know, semis we spoke about, tech, even the freaking utilities. All right, so that we're talking about like nice sweet spot setup. You would see the bulk of these things get close to the green here. And I'm not even talking about major bottom setup. That's not even major bottom setup. This is just, you know, normally in a non-rigged market, okay, you would have these just mini correction consolidations where things got a little too out of hand on the upside, and you would get cooling off. And these things periodically would come down, you know, into bullish sentiment. But in a rigged market, okay, what happens is money comes out of here, goes into here. Money comes out of here, goes into here. Money comes out of here, goes into here. Like this. That's in the rigged market, you know? Money never leaves. Yeah, true. What's a non-rigged market? That's a good point. That's a good point. But, you know, so while the market's rigged, I'm not going to hold out hope that we get what we're looking for. I'm hoping, but by the way, on that note, because it's a perfect segue, big week of earnings next week, right? You get every behemoth releasing numbers next week. You know what also is next week? Speaking of rigged market. Yep. No, State of the Union. The Fed. Powell. Right? Isn't it next week? Powell's next week. I'm almost positive. I think this is the quiet week with it. That's why we haven't heard a peep from him. Yep. And yeah, I saw that thing you showed, Tim. The biggest companies all reporting. Yeah, you got a lot of Biden State of the Union. You got a lot of action going into next week. So, yeah, how does it all fit into what we're looking at? You know, is the tricky part here. Is the tricky part, you know. And the other thing, let me hold on, just so you get an idea, right? We know the Fed is still doing their thing. They're not even close to being done. The Fed still has the foot on the gas pedal. So unless they give some sort of indication, and how now? How are they going to do it now? Where there's no way. I mean, they're going to be more dovish. Can they be more dovish? They're going to be more dovish than ever. With Europe going through a hiccup, India has got, you talk about disaster. We're seeing India puts in the ETF. That's when you know things are going bad. When they're buying India ETF puts, you know shit has hit the fan over there. You know, so you got the reopening thing. There's some questions behind. Here is Goldman's Financial Conditions Index. Look at it. Took another whoop down. How nuts is that? Is that nuts or what? It's pretty nuts. Pretty nutty chart right there. You know, you look like these spikes, this is where stocks had trouble, you know, when you start to see this thing start to push to the upside. Look, 2015, 2016, this was Christmas time where Powell capitulated, right? This was, I think, another little pocket of the market that was rough. Now, look where we are here. Look at this. Oh, this is COVID? This is COVID. You're right. You're right. And look at this here. Unreal. Oh, spikes. They're not really spikes. They're just more of pushing higher, you know? This one was the COVID spike. I didn't even realize. Yeah, there is. This one just chopped because then you can't make this out. You won't be able to see that if they put it back that far. 2008, we're lower than 2008. 2008 was somewhere around here too. But I think we're lower now. Jules, I mean, for Christ's sake, Jules. All right, so that's the scenario here. That's the story. What anybody have any questions on the story before we get into some names? I mean, if we want to talk about some names. Everybody, no, not names. I'm saying anybody have any question on the setup here, what we're looking for in the whole scenario here? Thoughts on what we discussed on Netflix? Yeah, here's the thing. What I didn't think was going to happen, I didn't think we would sell off until we got Netflix earnings, me personally. Shows you how much I know. You know, I thought we would hang in there and then like we'd sell off like this if Netflix did this. It's almost a front ran that type of thing, you know? So now, you know, it's a little different where this is going to have an effect at the open tomorrow, most likely, right? But, you know, that might end up becoming an opportunity. What is correlate? I mean, the NASDAQ will probably get affected, you know? I don't know. Will Disney get affected? Is Disney down? Not much. Right? Roku, those things. Roku down 15. See Roku? So you're more than likely going to have some NASDAQ weakness. See, the thing is, if Netflix knocked the cover off the ball and you had a positive reaction, what they would have done is they don't even care. They just go and they start crowding into all the FANG and big tech names. You understand? Because if Netflix was mispriced and you had an upside reaction like this, they feel like there's value in all the FANG and all the big tech into earnings. So you would have had a rally. But now, and we probably would have seen sweepers swarm into those names off the open. Now, you know, this is the opposite coming off some selling. So we're going to see some selling tomorrow. But that's good. We want that because off of today, you know, one more day of selling and we're more than likely going to have a squeeze setup. Yeah, I got to believe off the open at the least. Off the open, we're going to be down. You know, off the open. And we'll see, you know, we'll see how we look on the rest of sentiment too, how close we are. I mean, the squeezometer closed around 40. So we're not too far away. Yeah, that's why I'm saying the squeeze play, I think, is something we have to play without even, you know, no matter what, we got to try to take advantage of it, you know, whether you're being really quick about it or, you know, you're grabbing some spy calls to catch that gamma squeeze in whatever way, that's the trade that you want to keep firing at until it fails. And with this down here, we're dummies if we don't, right? Like we got to look for tactical squeezes when this is down here, no matter what. No matter what. If it doesn't work out, it doesn't work out. You don't even worry about that, because more than that, it's working out. So that's why I think that's the thing we got to be focused on initially, and then we'll see how it goes. We'll see how it plays out with earnings in the mix too. You know what I mean? We don't know. There could be up downs throughout earnings season. And what goes up, down? That's a whole other thing. That's, you know what I mean? I don't even, like, what theme out there, right? It's going to be based off earnings. So if reopening names sell off earnings, right? If there's a negative reaction, the reopening names are probably going to sell off with it. If tech, if the semis, if there's a positive reaction in LRCX, it's going to take the semis higher with it, right? Over the short term. So that's the tough part here. That's why when I say, like, we're in the hands of the earnings gods, that's what I mean by that. You understand? No matter what you're looking at, you could have, like, Netflix could have looked great on a chart today. You could have seen sweeper activity, whatever, sentiment. I don't care what it would have been. But if you get this type of reaction off earnings, all that goes out the window over the short term, right? It means nothing. Right. Pray to the earnings gods. That's your best bet if you're going to play, through earnings season. Oh, but that's what I'm saying. This is all good. This is all good. Because I don't know about you guys, but there was nothing left. There was not much left. You know what I mean? Upside. There was not much left without really taking on a great deal of risk. It gets, you don't want to, it was a little late, but this is good. We'll take it for some selling here. Probably should have started here, but it reeled in some melt up chasers thinking, all those caution signals never work. You know what I mean? Let's chase and buy this anyway. And that's the problem, right? That we talk about on every webinar. You can buy this here and the market can continue higher and you feel good about it. But once this comes, it wipes it all out anyway. So it's like playing musical chairs, right? How long am I going to stay green before it turns on me? That's the problem. Where when you're down here, it's the opposite in a sense, right? You could be early and you can be underwater, but when the turn comes, you're likely going to be rewarded. The difference. Oh, that big guy, 7 million in VIX? Is that the guy who keeps rolling? Or who's that? Input premium? No, the July call spread. I think he's talking about something else. I think there's a monster who keeps rolling a position. Oh, he's talking about the call spread? No, it doesn't expire tomorrow. The call spread was out in the summer. July was the call spread. And listen, now, in hindsight, the VIX call spread, I mean, it was July. Who knows? Who knows? Put premium. Put I think that's the guy who keeps rolling he's talking about. Anywho, yeah. So let's talk about some names. By the way, the Russell I saw. I mean, it looked worse than it actually is, right? This Russell's just been going sideways. I would love a setup out of the Russell out of this. I really would. You know, you had this sick run here. It had to do this at some point, right? Had to. Yeah, get TNA back in action. You know, I don't know how it sets up. This is pretty easy how this will set up, right? Even if you get, see, over time, it would be something like boop, 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 right? And then you get to, oh yeah, the bottoms and new highs. That sort of thing. But time. The longer it takes, the better off we'll be. Yeah, and what do I mean by long? I'm talking about, like, you know, even this, for Christ's sake. Something pre-election. The pre-election, the one that we got screwed on, is I'll take in a snap of a finger right now. No, this. Oh, we got screwed on this. Because the election was right here. So if you had to, if you wanted to get long, aggressive, you had to get aggressive into the election. You know, and then run the risk of watching futures plummet like the last election, pull your hair out of your head. Yeah, that's what it was. That's what it was. You saw even hedge funds, everybody got liquid. Everybody, including me. You know, everybody. Everybody got in cash before the election, and then they just ran it away from everybody. The contested election. You know, but this is exactly, you know, this is exactly what we could use here. And that would like fit the 2009 analog too, 2009, 2010. So anyway, that's what we can root on. But for now, we'll play for. And by the way, the sentiment squeezes. If you're wondering, like, well, why would you play for these sentiment squeezes? You see, like this here. This is like here. Okay, this it doesn't look like much. That's a sentiment squeeze. You know what I mean? That's what 100 and something handles. You understand? So these are the squeezes that even if you're in something prolonged, you can catch multiple squeezes in that. You know, and then you get some of the other stuff to line up, and that's where you want to start swinging names with a little bit of time. You know, but in the meantime, you want to catch these snapback rallies that are pretty powerful, especially if gamma's involved. Let's look at some names for shits and giggles for a little bit. Even though right now, breath in general, Tim, has been disgusting, no? Disgusting. But, you know, there's two ways. I think Santoli hit the nail on the head. There's two ways to look at breath. You could look at it in a bad way, and you could look at it, the good way would be a lot of stuff has already started to correct. So there's less damage that has to be done. You know what I mean? Like, think about that. There's a lot of stuff out there that's been decimated. There's stuff out there, there's nothing left. You see some of these SPAC plays and growth names, there's nothing left. Zero. AI, exactly. Look at this. Like, you know, they destroyed a lot of these things. Forget about the SPAC plays, right? Is this thing still going low? No? Open. Right? Look at this. Right back to where it started. It's going. Look at this. Skills. But see, like this, I don't even have an interest in this. Even here, you know, they wiped out the whole move. the group itself, there should be new names that emerge when a fresh rally comes about. You know, forget about these old SPAC plays. You know, a few of them are going to survive, but I don't know. Anyway, yeah, Fubo, QS. Look, right back to where they started. DM, Bill Miller. Look at it. Can you imagine this whole move got wiped out? This whole entire move? That's nuts. That's nuts. And you know, guys, they got to, remember, we're like, oh man, they're not getting to these guys. They got to them. Look, Penn started getting to it, right? They're getting to it. And, you know, they could easily go lower. They could easily go lower. Bill Miller loves DM. Yeah, he loves DM. Loves it. Yeah, but, you know, look at the rally. Like, at some point, this is happening. This is not going to continue forever. What the hell does he think he's got on his hands? The next Microsoft? You know, eventually this is totally normal. This could come lower too. This could definitely come lower. Futu? Oh, Futu. Why? What do you mean reversal? That was up today and went down? Oh, offering. Oh, man. I wouldn't touch that thing right now. You kidding me? I would not touch this thing. Look at it. Look at this. I would not touch that thing. Anything that did this, I want, you know what I mean? I want nothing to do with on the long side. For two. So let's look at some of the names. GM, that's going to be an interesting name off earnings. You know, going to be an interesting names over. It could come in. It could come in. But off earnings, if you're going to sell off, you may get some answers to if it's ready to be bought. You know? But it's a crowded name. It's a crowded reopening name. And it's been a stud. It's been a stud. You know, so if you're in it longer term, you don't necessarily sell it. But, you know, as far as buying it, personally, I would wait and see what it looks like earnings. Because if there is a hiccup for earnings, you're going to get selling. You know, you're going to get selling. Probably be bought after that, but you're going to get selling. These Chinese names, I don't know. You need time. I got VIPs. That's my play for with some time, you know? But I guess that applies to PDD and all those names. I think they're in the same boat. You know, they're in the same boat. They're in the same boat. But if, you know, with time, see, the thing is, this thing caught a beating already. You know, caught a beating already. So you could take a shot. You know, that's my outlook on it anyhow, with some time. Yeah, TME as well. TME as well. But just, again, make sure you have enough time and you're not stressing this, because this is nothing. This thing goes up and down $4 and it means nothing. Zero. You know? What I'm looking for at least like here. That's what I'm looking for. SE, is it pulling back? Every time we say SE is pulling back, look at it. This thing doesn't pull back. Why doesn't it pull back, Ani? Why? Please tell me why. VIPs, I have the August line they've been bombing, Tree. That August line they've been bombing. ASO had that big squeeze, heavily shorted. Here, tough. The squeeze position came down a little bit. I don't think that's that big of a deal because of that's what happened here. They got squeezed. But, as far as an entry up here, I'd be careful. I think this is all squeeze. Like, I know they came out with good news, but it was because it was heavily shorted. Yeah, this has been active. This has been active from down even here, really active. No, here. Well, wherever. It's been active all over here. And, there was a huge short position. And that, was a catalyst for this. But I'd be a lot more careful here. I'd be a lot more careful. Match, Dan, that's a nice name to get your hands on when it's time. It doesn't even look that bad. It's holding up well, no? It just probably needs more time. Unless it catches news. Like, look at Nuon. I thought Nuon needed time unless it caught news. It caught news, But that's why, if anything, you buy off weakness, lower end of the range with some time. And if it catches news, yeah. But here's the thing. This thing was rallying even before the reopening theme. That's why it didn't get that big of a pop on reopening. This thing was strong throughout. What's the other one doing? Bumble. That was a hot IPO. Nobody even talks about it anymore. Look at this. Dead. Here's another one. Dead. Right? People couldn't wait. Oh, Bumble's opening. Later on, I can't wait to buy Bumble tomorrow. You could buy all the Bumble you want right now. It doesn't have a pulse. Right? It's a real Bumble thing. Well, you see what I mean? Like, the real names, the real companies, they're getting repriced, but they're going to reach a level where they find interest. They're going to reach a level where they find interest. That frog, this thing. It's another one? Tree. You remember this one? It still hasn't done a thing. BIGC. You guys remember this? We were looking at this name. Feels like ages ago. Dead money. And I can't remember the last sweep or anything we've seen in this. Oh, Ani. The market gods, they don't like the cockiness. They never like the cockiness, Ani, right? You want to flash. You want to talk shit. You want to talk a big game. Right? Gas up the refract. Try to overthrow the market. The market gods, they're a fickle bunch. Yeah. They don't take shit. Shamath pounding the table on all that crap he had all the way up. Unreal. Pins. What you talking about for earnings, as an earnings play, or is it's a name you're eyeing off of earnings? That's what he said, Trey. That's hysterical. Yeah, I would watch it. I would watch it off earnings. And, obviously, if they come in with another great quarter, you're going to get a big move on it. But it's also dangerous. If they have a slip up, they're going to get hit hard. They're going to get hit hard. And, that might be what you want and may be an opportunity. A lot of these names, especially the ones that have come in for a bit, if they get hit hard off earnings, that's probably going to be an opportunity. But they definitely have downside. Again, this is what is a problem. See this? You need some healthy digestion for a while. For a while. You see how over here this thing got hot? Looked like it was getting away and it just came right back again. It reminds me like Teledoc. Remember what I had? Teledoc is still in digestive mode. Look. No matter what, even in the rig market, right? What happens is this can go further to the upside, which they all did, beyond our imagination. But when the juice runs out, this is totally normal. Look at the cyclical names before they broke out last year. They all were in this for a long, long time. And they all came off of this before it. You know, they all came off of it before it. Tesla too. Tesla's tough. Tesla's tough. You know, most probably it's in breather, you know? It's no lock, but if you're going to play these things, you look to play them off the bottom of the range. And even if you're early, if a squeeze does come, you're going to get paid. Here's a good example of one. A, B, and B. Doesn't guarantee you're going to cash a ticket, but you have a shot, you know? So A, B, and B, even where it was before this pullback, if you're early, you know, the bottom of the range, if you get one of these, you'll cash a ticket. But, you know, there's not much breaking out. You had the big FANG names and the semis, they cooled off. There's not much breakout out there. Uber, let's see Uber. Yeah, that's been in consolidation too, huh? Lyft has been a little bit better because that didn't run as much. Yeah, that's in consolidation too. Yep. I think you hope for weakness, earnings weakness. And then if you like it, you buy it with time. That's the only thing I can bless here, you know? It's the only thing I can bless here. Hope that they sell it off earnings. You know what I mean? And then you buy with some time, you know, or at least take a starter. Maybe if you see some sweeper activity, you know, Lyft and Uber, any of these names. You know, Micron, Jules, enough. Let's look at the Micron orders today. This is Tepper action. Right? These are Tepper sweeps. The problem is Tepper's been in the name. The thing's been a beast. So is it new buying? What'd I do with it? Oh, I put it out. I didn't pin it. That's what she's doing, Luz. She's harassing me for Chewy. So this was the total. They hit other lines too, but these were the two big ones. 12,000 of the July 90s. Big bets. So this is the breakdown, what they paid of the 12,000. 27% of it, 565. That's the breakdown. You know, so they bought 12,000 plus of the July 90s. The July 85s, 7,500 of them. And then they hit August. And then they hit another July line, I think. Big action. And so this is what Micron looks like, right? So, I mean, I don't know. Like if you're buying Micron here in this vicinity, you're playing for this, and that's it. No? Forget about this. You can't look at this. That egg hatched already. That's the problem. You know, the chances Micron pulling off something like this from here, you're going to need a really strong market, you know? The risk becomes with these things. Look, this is not new for Micron. Watch. We've looked at this in the past. Why is it so slow, trading view? Clear my cache? What the heck is a cache? Is that a type of coffee? So you see here, right? Big move. And then look at this. Doesn't this look familiar? Doesn't it look like a lot of those growth names? Cash? Is it pronounced cash? Ah, nice. Yeah, so you see this? So you don't mind, right? Like you'll buy over here all day long with some time especially, right? Like anywhere here, you'd be buying with some time and you're going to cash a nice tick. Welcome to the internet. Lucy, the wise guy. But, you know, up here, that's where it gets dangerous. Like, where are we? Where are we in Micron? You understand? Where are we? Are we here? You know, where are we? That's the problem. And, you know, again, if it could go higher, whatever. I have no crystal ball, but I just, you know, I like stuff here. Yeah, like Joey, you remember Micron when it was dead and useless and on people's do not trade list? Yeah. It was really tough, the early part of that. It took a while, you're right. I know, Lucy, you, me, and everybody else. But, you know, for position trades, that's generally what you want to be looking at, Luce. You know, not tactical trades, position trades with time. Like for me, like if you're trying to catch a big move with time, you know, you're asking a lot up here. You're asking a lot up here. You know, like that's the way I was taught in this business and just I've learned in this business, you know, like the big scores and positions were from players who bought early, you know, added if they were early and rolled so they could catch the move. You know, because up here, you know, even if you hold, even if you have the patience to hold and you give it a leash, you know, can you imagine like you're up 100% or 200% on calls and then you don't sell it because you want to let it run and then it corrects and crashes, or you want to pull your hair out of your head. They're down 50, 60% because they bought at the highs, Ani, right? Yeah. Yeah. So yeah, classic back home call. You're right. No, I know there was I don't know. It got retweeted like 100 different times. I don't even follow whoever it was. I can't even remember the name. But somebody with a lot of followers was touting Fubo like it had the cure for cancer. And almost guaranteeing tweeps here, guaranteeing them. And I was like, what? I don't understand. How is this? He's going to bury people if this thing just, if the whole group gets killed here. And he buried them. It got retweeted like a gazillion times. I don't even follow the person. Got crushed, huh? Crushed. And you know, this is another example. Oh, kidding aside. You know, we couldn't really get our hands on it. It was a little too quick because it was one of the later ones. But you guys remember where we were playing Fubo. You know, that's where you want to try to get greedy. It's worth it. You get lucky. You know, forget this whole move. You don't even need that whole move. But everybody looks back, right? They buy it here and they say, oh, look at this. This is what I want. And they buy it here thinking it's coming. Yep, Christmas trees. That's what they look like, Christmas trees. The Christmas tree pattern. That's what they look like. But yeah, so I want new stuff, and that's where I could get excited about swings, just new setups, new names that are here. In the meantime, I'll play some shit here and there. I'm not gonna get too excited. Pot stocks, forget it. I want nothing to do with pot stocks. Nothing to do with them. Wish, like, what do they even do, Lucy, that this thing is just, I mean, it looks like it's going straight to zero. Like, what do they do? Why did they even come public? What the hell do they do that this thing ran to 30, came back to where it started, and then corrected another 80%? Oh, there's not a bid to be found in this thing. This thing must be getting shorted out the ears. That's probably some of the call buying we're seeing, I haven't seen it on any other short list, but, oh, forget it. Look at this. So, but that's what we need. We need new names. There's 4. This is a nice one, too. This one still looks good. This was a good one. IAC. They own Match, don't they? What a beast. What a beast. Yeah, this thing catches big action when it catches action. IAC. You know my answer already. This is the problem here. This is the problem. So I'd probably wait for down here and try to trade a range here. Try to trade a range. A lot of these things are the same way. I mean, D-Dog had a nice run, but it got hit the last couple of days, right? Oh, yeah, gave half of it back. Look at this. Because this was just spectacular. Yeah, they like to buy these dips. You're going to see buying from time to time at the bottom of the ranges here. And some of these names they like. We'll see again. We'll see if they do it again. We'll see if they do it again. IGT. It's funny? Every time they buy IGT, the sector ends up teetering out. Look at poor thing. Yeah, Tree. That's well said. It's so damn hard. Individual names are as tough as they're going to get right now. They really are. Because you would say, oh, no, correction, everything is bearish. And then you get a squeeze, so everything is bullish. What we've been going through is the most difficult climate for individual names. By far. because there's no rhyme or reason anywhere. Dead. Dead. Later, MGR. You know, same thing. Monster move. The juice ran out, and now it's just in one huge range. You know, like this thing could one day go to 90, and you think maybe it's back, and then come back down and revisit the 60, you know? Yeah, that's, you know, it's the complete opposite, right, Tree? We went from exactly, that's what I was saying. We went from who cares what the market's doing, just let's buy names. Whatever they're sweeping aggressively, we buy them. And now it's the opposite, you know? Now you want to pay more attention to the indices than the names because the names are impossible. CVE, this is like a smaller energy name. Listen, energy's tough. We know that, but you're going to get a green light sooner than later. Probably any day you're going to get a green light. So if you really like energy and you got Kalanovich on your side, Tom Lee, like you see what happened to Tom Lee recently? Like that's exactly the problem with the market right now, right? And whatever, call him a perma bull, but you know, he's so, you know, used to buying the dips, and it's been the right thing to do. And this dip here, he was pounding the table on, but the names that he was telling people to buy did nothing. Nothing in this rally. So he was right on the market, but all the names that he was involved in didn't move. Some are lower, a lot are lower. Airlines. Yeah, he definitely is. You know, so that right there is the perfect example, right? A perma bull sticking to his guns, pounding the table, buy the rally, but listen, stick with the epicenter stocks. That's where the money's going. Stick with the epicenter stocks. And, you know, ironically, it was Feng. You know, Feng. Or he should have just pounded the market, not even talk about names. But that's what it is right now. That's what I'm saying. We need to try to catch squeezes in the market, put names aside until this clears up. And if you want to, you know, if you want to start looking at names and dabble, you make sure you have enough time, man. Make sure you have enough time. Otherwise, it's torture. And it's a lot easier said than done, right? Oh, I'm going to sit with time and not stress it. You're in front of the screen all day. Every down tick you want to throw up on the screen. I don't care how much time you have, right? It's easy to say, oh, just sit in it, you know, or I'll buy more if it goes lower. It's not an easy thing to do. Not an easy thing to do. You really got to have the conviction, you know, even still when you're buying with time. You got to have the conviction. All right, look, it caught missiles. You know, I got sentiment on my side. If it comes in, I'm going to look to add. You know, you got to have that conviction. If you don't have that conviction, oh, are you kidding me, Ani? Sharpies, nothing. Sharpies aren't bearish. They're not bearish. They're neutral. Nothing. No signal. Riffraff, they're long, but they get shaken out easily. Ani saying gamma ticked up a bit today. So much for that gamma signal. I got to get to the desktop after this. I'm on the other screen now. I'll post as soon as I get off. I'm getting off now anyway. All right, boys and girls. So be patient. Look to catch squeezes in the market off weakness. That's what we got to do for now. Bide some time, get through some earnings. Hopefully things clear up a bit. Good luck the rest of the week and big week next week. Make sure you eat your Wheaties. Have a good night, everybody.